Hello and welcome back to Principles of Accounting 2. I am your host, Dr. B. Happy to have you with us still as we moved into week 4. We're going to be talking about job order costing today, which is a very important concept as we discuss we'll continue to discuss all of the costs associated with producing a product. And it's really a continuation of what we talked about last week, but we're building more on what we learned about last week when we talked about those costs. Remember, we talked about the cost of making a product, such as direct materials, direct labor, and factory overhead. We're going to build on those costs of making a product through what we call job order costing. And in this concept, we are talking about what it takes in order to build and deliver a product based off of the job that's being performed to do that. And so we'll dive into pretty deeply into that today. I wanted to call your attention to where we are in the classroom. We are in week 4 already, which means we're about 25% of the way through this course. Right? That's cool just to say that. We're making amazing progress. And again, and I've already said it, but thank you to all of you for continuing to do the work and to do it on time and to continue to make progress. It's fantastic, and you're all doing very well in the course. So thank you again. So here we in week 4, a couple of things. There's 2 action items we have for this week. Under Engage and Explore, we have a discussion board. This is the week 4 discussion board, and it's, of course, based on job order costing. In this discussion board, the first part is your initial post. You're going to be responding to these 3 questions. In your original discussion post, I would like you to complete that by Thursday night. Okay. Well, technically, you should do it on Wednesday because you have the time, right? We have that class time on Wednesday. So on Wednesday during class time, I really want you to take care of this part 1 of the week 4 discussion, which is your initial post. Okay, you're answering these 3 questions, and then after Wednesday, I want you to respond to at least one of your classmates, preferably 2. And in your response, I want you to pinpoint really these 3 things, okay? And that'll really create a sense of community through discussion, and it will help to enhance our understanding of job order cost. So by Wednesday night, part 1 of the discussion forum. By Sunday night, respond to classmates, okay? Uh, and do your best to follow those instructions. I'm sure you'll be fine. But so that's one task for this week, and then of course the other task is the quiz related to job order costing. So those are your action items. And so with that, let's go ahead and talk about this concept called job order costing. And let me just swap here. And as I mentioned last week, and really even the week prior, in this course, I want you to get into the mindset of a manufacturing company. And the reason for that is because we talk a lot about cost in this course. And it's really important for you to understand all of the cost related to making a product. The reason why that type of stuff is helpful for you as you move forward in your career and in your management, your development, is to really help you to understand all of these business costs, like making a product, because it'll help you to make better decisions as a manager. That's why we go through this. That's why we learn this stuff. It's not just because Dr. B wants you to learn how to what the costs are to build a product, it goes beyond that. It really involves your ability to manage a business based off of cost. And so that's why we're learning these things. Yeah. So today I'm going to go through those costs like direct materials, direct labor, and factory overhead, which are the costs to create a product, direct materials, direct labor, factory overhead. Those costs get recorded as we are building the product for the customer. Okay. Uh, Job order costing, the idea behind it is we are building a product based off of the customer's order. That's why we call it a job order. We build a product based off of the customer's order. That's what job order costing is. We're tracking the costs associated with building the product for the customer. Yeah. We record these costs on what's called a job order cost sheet. Uh, and so I'm going to show you what that looks like today. And I'm going to show you how we record those costs as it flows through the process of being manufactured. Okay. So that's job order costing in a very basic sense. You'll also hear me briefly discuss a concept called process costing, which we're going to learn about next week. But process costing is not based off of a customer's order, it's based off of a continuous process. And I'll briefly explain the differences between the two, but I just want to let you know that before we jump into it. So, first, let's talk about the difference between process costing and job costing. Job order costing is based off of a customer's specific order. Customer places an order with a company to build a specific product. The example I'm going to use here is Toyota, the automobile manufacturer Toyota. Toyota makes a lot of different vehicles. They make, you know, sedans, SUVs, trucks, etc. Right? Toyota uses what we call just-in-time manufacturing, and we talked about that last week. The reason why I bring that up is because Toyota uses what we call job order costing. The customer or the dealership places an order with the manufacturer, Toyota, and that order is very specific to that customer. The customer customizes the vehicle. They want it very specific to their needs, right? So we use what's called job order costing because the orders are often custom. The company provides diverse products and services. For example, Toyota offers different types of vehicles and services. The production volume is relatively low. In other words, they're not making, tens of thousands of the same exact vehicle, right, in each batch. That's more process costing. There's a high product flexibility. For example, a customer who orders a vehicle from Toyota could say, "Hey, you know what? I want this. I want this truck in an army green. I want a lift kit put on it, specific running boards. I want LED lighting, um, leather interior, sunroof, whatever's right. High flexibility. In other words, the customer has the ability to ask Toyota to make the car specific to that customer for their particular needs. So high flexibility. That's what that means. And what we call low standardization. In other words, they don't have just a simple base model of a particular vehicle. You'll notice that. It's low standardization, right? So that's job order costing, a job order costing type of business. And the example we gave was Toyota. Next week, we're going to learn about what we call process costing. Process costing, as I had mentioned earlier, is where we continuously make this same product over and over and over again, regardless of the customer's order. Process order costing, the example I like to give is water, a bottle of water. Let's say the company is Coca-Cola. Okay, they make a lot of the same product. Yeah, water, soda, a couple of other snacks and things like that. But the process to make the bottles of water is the exact same. Okay, Coca-Cola produces about 100,000 bottles of water every few hours. Okay. It's a highly repetitive process. They use the same exact method to produce each bottle of water. It's on the products are extremely similar that they sell. It's a high production volume, meaning they produce a whole lot of them. There's very low flexibility with the product. In other words, it's the same ounces, the same label, the same cap, very low flexibility. And it's highly standardized. They try to make sure that each product is the same. So that's the primary difference that we're learning about when we talk about job order costing. We're talking about specific customer orders. When we're talking about process costing, that is where it's made on a continuous process, regardless of the customer's order. So, but again, today we're going to focus on job order costing. Next week, we're going to focus on process costing. But it's important that you understand the difference up front. So, earlier I had mentioned that it's important that we follow the flow of cost. You see, we make products based off of direct materials, direct labor, and factory overhead. Those are the primary costs that go into making a product, like a vehicle, for example. As the product moves down an assembly line, it goes through several processes, right? Everything starts as raw materials. Raw materials for a vehicle would be things like steel for the frame, aluminum for the body, engine components, uh, fabric for the interior, rubber for the tires. These are all raw materials. They're unprocessed. You see? We requisition those raw materials to put them into work in process inventory, and then we begin building the car, right? I got the steel frame put together. That's the first step. Okay? That's at the beginning of the assembly line. Put the steel frame together. The next part is mold the aluminum to put the body onto the frame. Okay, that's the second area. Then it moves further down the assembly line. Engine components go in. Moves further down the assembly line. The tires go on. Moves further down the assembly line. The interior is put together. You see? Each step of the work in process, we're adding a little bit more materials and a little bit more direct labor and a little bit more overhead at each step as it moves through the assembly line process. Okay, we call that cost flow, right? We're following the cost and building it up as it moves through the manufacturing process. Okay, so you'll notice that every single job represents an individual customer order. That individual customer order, we track the direct materials used to build the car, the direct labor used to build the car, and the factory overhead allocated to building the car. Okay. We add all that up on our job order cost sheet. That's how we figure out what the total cost is of making the product. And then we move it off the assembly line when it's done. And we put it into finished goods inventory, and then we deliver that product to the customer. Once we deliver it, it comes out of our inventory and goes onto our income statement as cost of goods sold. That's the physical flow. Right? So it's important to understand the physical flow of the costs as we're learning about job order cost. So, as I had mentioned, raw materials inventory, that is the raw materials, right? To build a vehicle, we're talking about steel, aluminum, engine components, rubber for the tires, fabric for the interior. That's all raw materials, unprocessed. We take it out of raw materials inventory and we put it into work in process inventory when I requisition the stuff that I need in order to start building the car. See, work in process inventory includes that raw materials that I'm using to build the car, plus the direct labor being used based off of the employee's hourly wages times the amount of time that they're spending on each car. That helps me find direct labor, plus factory overhead. All that together equals my work in process inventory. When the job is done, the car rolls off the assembly line and becomes what we call finished goods inventory. And then eventually, when I sell the car, I take it out of inventory and it moves on to the income statement as cost of goods sold. You see? So, again, think about the physical flow as it's moving down the assembly line. What's happening with the cost? Adding and adding and adding, you see. So, here is the job order cost sheet that I told you about earlier. The job order cost sheet represents the customer's order. And on that job order cost sheet, we got things like the customer's name, what the job is. We have the materials that are used for this job, the amount of time that it takes to complete the job, and the factory overhead applied to the job. I'm going to break down each component here for you so you understand what you're looking at. First, of course, is direct materials. These are the raw materials used for this particular customer order. Okay, you'll notice that it says requisition. You heard me use that term earlier. At the work in process stage, we requisition for raw materials. A requisition form is a form that you fill out and it says how much direct materials I need in order to complete this job. Send it to the warehouse sends you the raw materials based off of the requisition form. Now that form, it's going to have all of the individual parts, and their associated costs listed out on the requisition form. We take that data from the requisition form, we put it here under the job order cost sheet. As the job is being worked on by the employees, we track their work based off of what we call time tickets. Okay, here's what I mean by that. When you have employees on an assembly line, for example, you want to track the exact amount of time that they're spending on each job because we're going to bill the customer for that work, right? So we take the amount of time that they spend working on that job, usually in terms of minutes or hours. We multiply that by their wage, their hourly wage, to get the direct labor cost for that employee. Oftentimes, we're going to have more than one employee working on a particular job. So, and we would have that broken out under the direct labor based off of the time tickets for each employee. So that's where we get the direct labor cost from. And then the third cost, is factory overhead. Factory overhead can be applied in a couple of different ways. The most commonly used method for applying factory overhead is what we call the single plant wide rate method. Single plant wide rate method for overhead. And the way that that works is management decides to what we call factor. And the factor is based off of a specific cost driver. In this example, the factor or the cost driver is direct labor. And management decided to put 160% of direct labor as the factory overhead rate. And of course, the way we found 1600 is we took 1,000, which is the direct labor amount, times 160%. Right? That's how you get 1600. So we add up the total materials used for the job, plus the labor for the job, plus the overhead for the job, to give us our total job cost. In this example, 3,300. But that's an example of a job order cost sheet for one job. We have a job order cost sheet for every single job that we receive. This is why, based off of what I described earlier, it's important that we understand the flow of the costs. Okay, the direct materials flow costs, the direct labor flow, the overhead flow. Yeah. It just helps us to understand our overall costs a little bit better. And as managers, it helps us to control our costs based off of these job order cost sheets. Okay, think about the physical flow. I'm going to talk about direct materials, and then I'll talk about direct labor. Starting with materials. The company needs to get the raw materials from somewhere, right? We got to order the raw materials from somewhere. They don't just magically show up in the warehouse. So Toyota, in this example, we need to purchase raw steel, raw aluminum. I need engine components. I need fabric for the interior, rubber for the tires. And those are my raw materials. I'm sure there's a lot more than that. I'm just trying to keep the example easy. So Toyota will purchase those raw materials from their various distributors and vendors. They place the order using a you know order sheet or whatever, send it to their vendors. Their vendors then send them the raw materials that they ordered. When that part happens, the receiving department at the warehouse receives the raw materials, and inside the boxes is what we call a packing slip, also known as a receiving report. It tells you the exact quantity of each component or each raw material that we ordered. Right? And you match that, you do a physical count, match it up. That's your receiving report. It's called a material source document, same thing. Right? We record that receiving report onto our materials ledger cards. Materials ledger card is quite simply the name of the raw materials, when it was received, how much of it we received, and the cost. And just like any other piece of inventory, we update that balance, right, as it's being purchased and as it's being requisitioned for work in process. Okay, so that's materials ledger card. So as it's being requisitioned, a requisition form gets filled out, sent to the warehouse where the raw materials are, comes out of raw materials and into work in process on the respective job order cost sheets. Okay, so that's direct materials. You'll notice that we also have indirect materials. And as you may recall from our conversation last week, indirect materials are very small parts that do not make up the majority of the cost of a product. An example of indirect materials would be glue for the fabric for the interior of the vehicle. Very small amount of cost. You almost can't track it to the job because it's so small. That's indirect materials. Uh, Nuts and bolts, tons of them. Okay, indirect materials. They make up a very small total cost. You see, and that we can use them on all kinds of jobs. Right? That's indirect materials. They still get requisition, the indirect materials do for the jobs, but uh, they're a little bit harder to track. That's why we put them in with factory overhead. Factory overhead. Okay. So remember the physical flow. It's a very important thing. When the company decides to purchase some raw materials from their vendor, they complete the purchase order, send it to the vendor. The vendor then sends the company the raw materials with the packing slip. And so we need to, and of course, they usually send the bill when they send the raw materials, right? So I receive the bill, the packing slip, and so I record the bill, right? Debit raw materials inventory, credit accounts payable. Why accounts payable? Because I just got the bill. I'm not paying it right away. Okay. And then on my materials ledger card, I got to record what I received, when I received it, the number of units, and at what price. Unit price. If it's more than one unit, obviously, I take the unit price times the number of units ordered to get the total price for that particular raw material. That's when I receive it. Yeah. Then a couple days are going to go by, and my assembly line, they're going to need some of that raw material that I purchased. So the warehouse receives a materials requisition form saying, "Hey, I need 1 unit of this particular part, 1 unit, 4 units of this particular part, whatever." So materials requisition form goes to the warehouse. The warehouse then sends work in process assembly line the raw materials. That's where it says issued. Yeah, we're issuing those raw materials. So you can see that I'm constantly updating my balance for each of my raw materials. Okay. So that's what the materials ledger card does, is it provides me with an updated balance of all of my raw materials I have on hand. This is that materials requisition form I was just talking about. You'll notice that it's being requisitioned by the work in process department, and you see what's on there, right? It's the individual raw materials listed out based off the part number description, the number of units, the unit cost, and which ultimately gives us the total cost. It's very simple to calculate. You just take the unit cost times the number of units. Right? Then you just add it all up. And that's the materials requisition form. The reason why these materials requisition forms are so important is because I need to update my inventory based off of those requisitions. So in this example, I have 3 different jobs with 3 different requisition forms for those raw materials. I total them all up, and it's $1,800 worth of raw materials that I requisition, meaning transferred from raw materials to work in process. I need to create a journal entry for that to record the transfer from raw materials to work in process. And the way I do that is I debit work in process inventory and I credit raw materials inventory. This shows us the transfer from raw materials to work in process. Yep. Very important step because that's how you track the flow of your inventory. So that's inventory, uh, direct materials. Yeah. Now I want to talk to you about the labor part because the labor is equally as important. We need to track the exact amount of labor that we're charging to each job. And the way that we do that is through time tickets. A time ticket, as I had mentioned, is we're tracking the exact amount of time each employee is spending on each job. Okay. That represents the direct labor, which goes on to the job order cost sheets. We also have indirect labor, as you probably recall from our conversation last week. Indirect labor includes individuals like the supervisor. Remember, the supervisor of the manufacturing facility, that's indirect labor. And the reason why that is because the supervisor is not directly touching the product. They're not on the assembly line. They're managing the people that are. So it's indirect labor. Another example of indirect labor includes things like the maintenance staff who maintains the machines or maintains the cleanliness of the shop floor. That's all indirect labor. They're not working on the vehicles. They're indirectly there because they're working on the machines. You see? So that indirect labor gets assigned to factory overhead because we cannot directly trace it to a specific product. You see? So that's labor cost. What does a time ticket look like? So here we have a couple of examples of time tickets. I got an employee who is working on a couple of different jobs, 3 different jobs. Okay. Job 15, 16, and 17. This employee started working on job 15 at 8 a.m. on March 10, 11, and 12, ended 12 p.m. on 10, 11, 12. And then they came back from lunch and worked for a little bit more time on that particular job. So over the course of 3 days, this employee spent uh, 8 plus 8 plus 4 hours on this particular job. The hourly rate of this employee is $50 an hour. So we take the hourly rate times the exact time worked for each day, and then we add up all the days involved. In this first example, we have $1,000 of direct labor. You see, it's a matter of tracking the exact amount of time that the employee worked on each job. And that's how we find direct labor. Hourly rate times the exact amount of time worked. That's how you calculate it. So, and why is that important? You might be wondering. Because remember, in work in process, there's 3 costs associated here. There's the direct materials, we already know what that looks like, direct labor, and factory overhead. We add up all of the direct labor worked on all the jobs, and we add it to work in process. Because remember, work in process includes direct materials, direct labor, and factory overhead. So we add in direct labor through this process, okay? So here we have $4,200 worth of direct labor worked during the month of March. And so I need to add that to my work in process inventory balance. I debit work in process inventory 4,200 to increase my work in process inventory balance. And I credit wages payable because obviously I got to pay those employees, right? 4,200. Okay, so that's how direct labor works. Now it's time for factory overhead. Factory overhead, as you know, are things like indirect materials, indirect labor, utilities, rent, etc. All of the things that we cannot directly trace to the making of product. So I had mentioned that there are a couple of different ways to apply the overhead cost. One of those methods is called the single plant wide rate method. This is also known as the predetermined overhead rate. And here's how it works. The predetermined overhead rate is calculated by the estimated overhead costs divided by the estimated activity base. Okay, I'm going to break it out even further so we understand how it works. We set the predetermined overhead rate based off of that calculation. Estimated overhead cost divided by estimated activity base. To find the applied overhead, we take the overhead rate times the actual amount used. We do it through a four-step process. First is we figure out the predetermined overhead rate. Second is we apply the estimated overhead. Third is we record the actual overhead. And the fourth is we close out overhead. I'm going to show you these four steps in a little bit more detail. So the first one is setting the predetermined overhead rate. We do that by taking the estimated overhead cost divided by the estimated activity base. In our earlier example, we had 160% of labor. How do we get that 160%? You might be asking. We take the estimated overhead cost of 200,000 in this example, divided by 125,000 hours of activity base we expect to use. 200,000 divided by 125,000, of course, is 160%, or 1.6. So, how do we record the overhead rate, the estimated overhead rate? We take our direct labor cost, we multiply that by 1.6, also known as 160%. We do that for each job. You get the total. We then apply factory overhead to work in process. Remember, work in process cost includes the direct materials used, plus the direct labor used, plus the factory overhead. Because factory overhead is difficult to apply on an actual basis, we estimate it. In this example, we're using a predetermined overhead rate. So we debit work in process inventory and credit factory overhead. That's how we add in the factory overhead. Now, step three, we record the actual overhead. So at the end of the month, I've applied my estimate. At the end of the year, that's when I figure out what the actual overhead was. In some cases, your estimate is either going to be overestimated or underestimated. My estimate was 160% of direct labor. Is that too high or is it too low? I don't know. But that's my best guess. It's my estimate. Then at the end of the year, we get our actual numbers in. We know what our actual indirect materials are, our actual indirect labor, and the other overhead costs. When I figure out my actual overhead, I need to adjust based off of the actual results, okay? So I'm going to show you what this looks like. Here are the actual results. I actually used $550 worth of indirect materials. So I debit factory overhead $550, credit raw materials inventory $550. That's to adjust for the raw materials, you see? When it came to the labor, I actually incurred $1,100 worth of indirect labor. So I debit factory overhead $1,100, credit factory wages payable $1,100. What about all the other overhead parts that we actually incurred? I had incurred depreciation expense of $2,400, rent of $1,620, utilities of $250, and prepaid insurance of $1,000 for the month. Add all those up to get $5,270 of factory overhead applied. So I debit factory overhead $5,270, and I credit all of the individual overhead components. What that does is it raises factory overhead based off of the actual consumption. Soon I'm going to show you how to adjust. Remember, we need to follow the physical flow of the cost. We started with raw materials inventory. How do we get that? We had to purchase it. Okay. I requisitioned the raw materials inventory into work in process. I added in direct labor and applied overhead. Once I sold, or once I finished making the product, I took it out of raw materials inventory and put it into finished goods inventory. Then when I sold the product to the customer, it came out of finished goods inventory and onto the income statement as cost of goods sold. The physical flow follows this flow on the financial statements. This flow chart is the reason why they call it that, right? This flow chart shows us the physical flow of the costs. Starting with the purchases and raw materials, then the requisition, direct materials used in work in process, and then the employees, direct labor used in work in process, number 3. Number 4, additional indirect materials and work in process through factory overhead. 5, indirect labor. 6, we took all that factory overhead and applied it to work in process. 7, other overhead. 8, we took it out of work in process, put it into finished goods. 9, we sold it to the customer, it came out of finished goods and went onto the income statement as cost of goods sold. But you see, it's the physical flow of the costs. Once you understand the physical flow of costs become relatively easy to understand and easy to manage. These are the journal entries that we made throughout the process. And you'll notice the flow. It can be seen through the journal entries. We purchased the raw materials, debit raw materials, credit accounts payable. We used those raw materials, debit work in process, credit raw materials. We added in some direct labor, debit work in process, credit wages payable. We added in factory overhead, debit factory overhead, credit raw materials inventory. I'm sorry, that was indirect materials. Factory overhead for the indirect labor. We applied factory overhead 160%. Applied the actual overhead costs. We finished making the product. It comes out of work in process inventory, goes into finished goods by debiting finished goods inventory, credit work in process inventory. Then we sold it, debit cost of goods sold, credit finished goods inventory. And obviously we sold it at a profit, so we debit accounts receivable and credit sales to represent the actual sale of the product. You see? These journal entries tell the same story. Understanding the physical flow is really important. Because once you understand the physical flow of the product and the costs associated with the product, building out this cost system is relatively easy. It's just a matter of thinking about the physical flow of a product being manufactured. There's a report, this is managerial accounting, right? Principles of Accounting 2 is managerial accounting. There's a report that we have, it's called a Schedule of the Cost of Goods Manufactured. What this report does, and we learned about this last week, is it shows me from a cost flow perspective what's going on in the terms of manufacturing. What's it actually costing me? And of course, it's a relatively simple process. We take direct materials used plus direct labor plus factory overhead applied to get the total manufacturing cost, plus any beginning work in process inventory balance minus ending work in process inventory balance equals the cost of goods manufactured. Once we know the cost of goods manufactured, we can then adjust for the over application or under application of the actual overhead. We're going to talk about that here in a second. So here we have an example. This company has the following information. Sales 5,500, cost of goods sold 3,300, gross profit 2,200, selling administrative expenses giving us a net income of 600. The inventory balances are the following. We got raw materials 1,400, work in process 3,420, finished goods inventory is 6,000, total inventory is 10,820. I want you to keep this in mind because we're going to go through the over and under application of overhead exam. So, as I had mentioned, we started with an estimate, 160% of direct labor. That was my estimate, right? I said, hey, overhead's going to be 160% direct labor. An estimate's kind of like a good guess. An estimated guess is what we call it. You're either going to be over or under the actual overhead based off of your estimate. So we need to adjust based off of that over or under amount. So here's how the adjustment process works. If the actual overhead amount comes in higher than the applied or the estimated amount, we consider this to be under applied. Right? That makes sense because actual is greater than the estimate. It's under applied. You didn't put enough percentage. Yeah. So that also means that the job was under costed. Oh, that could be. You want to be really careful about this because in business, if you under cost your job that you're performing for the customer, that eats away at your bottom line, your profit margin. Yeah? You don't want that. You want to maintain that profit margin. So when overhead is underapplied, we debit cost of goods sold to increase the cost of goods sold. That brings it up to its actual amount. And we credit factory overhead by that amount. If, in the event that you've over-applied factory overhead through your estimate, that means that the actual amount of overhead was less than the applied or estimated overhead. And in that case, your job has been overcosted. It's still not a great situation because you want it to be as close as possible. But when this happens, we debit factory overhead to ultimately decrease the factory overhead, and we credit cost of goods sold to decrease cost of goods sold. You see? So those are the adjusting journal entries that we make in the event that we're over or under. Now, looking at our example, here's an example of uh, based off of the numbers that we had, right? So uh, here we have we debited cost of goods sold and credited factory overhead because we underapplied our overhead costs. Now, how did we figure that out, right? How did you know it was over or under? Well, we took into consideration the indirect materials plus the indirect labor plus the other overhead, getting us to the over applied overhead amount. So we can see that there's a difference here. So that difference, of course, being 200. So, for example, the applied overhead was 6,720, but when we look at this, it's 6,920, right? So 6,920 in comparison to the 6,720, that's a difference of $200. Yep. You could even see what I did there? You could even apply the process of job order costing to a service business. Now, of course, a service business, they're not going to have raw materials or finished goods inventory. It's a service. Okay. Think of it like a service being a lawn service company. They mow the lawns during the warmer months, and during the cold months, they do snow plowing. Okay. We can apply what's called the job order costing system to that business. What we're going to use is the direct labor and the overhead as our costs. And the job order cost sheets represents each individual lawn customer, whatever. And we can track our process cost that way. See? And this is just an example of that. Here we have an advertising service business. We have the direct labor, number of hours worked at the hourly rate to get total direct labor. And then we add in the overhead. And in this case, the overhead is an estimated amount, predetermined overhead rate of $108 per hour. That's how we get this amount. So it just kind of shows you how we would use job order costing in a service business. Yep. Okay, and then of course, it's an accounting course, so there's a ratio. Oh, you love my ratios. Okay, gross profit ratio. I love the gross profit ratio because it tells us based off of sales, out of every sales dollar, how much is that as profit, right? So for a service business, we would take the sales minus the costs of the service divided by the sales. You could do the same thing, of course, in a retail business. Sales minus cost of goods sold divided by sales. Same concept applies. Okay. Gross profit ratio. It's a great ratio to understand, especially as you're trying to set prices, things like that. So that brings us to the end of our discussion today on job order costing. Are there any questions that any of you might have about job order costing or anything along those lines. Obviously we finished a little early today, but this is a very straightforward discussion. I'd mentioned a few weeks ago that this course is a lot more straightforward than Principles of Accounting 1 is. And the reason for that is because in managerial accounting, we're talking about the actual application of accounting in business. And so I try to make it so that you understand all of the concepts go into it. So, any questions, comments, concerns? It makes sense, right? Yeah. Yeah, I appreciate that, Ashanti. Yeah, absolutely. I do the best that I can to make things understandable. Uh, and so, that's my goal is to help you to really get this stuff. Okay, so as a reminder, what do you need to do this week? So going into the classroom, there are two major action items for you to take care of. The first is the discussion board. Open up the discussion board. There's two parts. Okay, by Wednesday, class time. Class time on Wednesday, I want you to complete your initial discussion post. Okay, by Wednesday, class time. So during the normal class time on Wednesday, complete your initial discussion post. Then by Sunday night, I want you to respond to at least one, preferably two classmates. Okay? Please follow those instructions the best that you can. So that's action item number one. Action item number two, of course, is the quiz related to our discussion on job order costing. All right? Are there any questions, comments, concerns about that? This is a very solid class. You're all excellent. But are there any questions on that?
No, I think it's everything clear.
Great. Sounds good, Oscar. Thank you so much for saying that.
All right.
Okay. So, great. Again, thank you all so much for everything. This class is going really smoothly. I'm very proud of all of you. You're all doing so well in this course. Uh, and a lot of it has to do with the fact that you're using that class time on Wednesday to complete the work accordingly. You're pacing yourself. You're not getting stressed out on Sunday night, scrambling to get things done. Using that extra class time is really important. So keep up the great work. I appreciate everything that you're doing. I'm glad that you're getting everything done on time. This is going really smoothly. I'm very, very happy with this class. And that's a credit to all of you. You're doing great work so far. So let's keep up the positive momentum. And we'll knock out those two action items on Wednesday during class time. You know, because we don't have lecture on Wednesdays. We only lecture on Mondays, unless we really need to, right? But use that class time on Wednesday to knock out the discussion board and maybe even the quiz, right? If you ever have any questions, comments, concerns, you know that you could always email me, call me, set up office hours, whatever you need. I'm here for you all the time. I'm here for your success. Okay, I hope you understand that. I really am here for you. So thank you all so much for your time today. I sincerely appreciate all of you, and I hope you have a great rest of your night. Thank you so much.
Thank you, Professor.
Thank you, Ashanti.
See
Thank
you
you,
next
Professor.
week.
Thank you, Oscar. Thank you, thank you, thank you. Appreciate all of you. Take care. Good night.
Bye.